Hello and welcome to the look ahead for Thursday, the 16th of May with me, Fiona Cincotta, Senior Market Analyst at City Index. So overnight, we'll be watching out for Japan's Q1 GDP figures. We've also got jobs data from Australia. The European session is getting relatively quiet. And then in the US, we've got a US data drop with building permits, housing stats, jobless claims, and industrial production. As far as earnings are concerned, watch out for earnings from Walmart and Baidu. So overnight, as I said, we've got the GDP figures from Japan. Now, they're expected to show that the Japanese economy contracted by 0.4% in the first 3 months of this year. That was after 0.1% growth at the end of last year. Now, weak growth in Japan is not going to encourage the Bank of Japan to start hiking rates anytime soon, although saying that, comments and the mood music from the Bank of Japan does feel a little bit more hawkish than it has done for some time. We've also got sort of, ongoing threat of intervention by the Japanese authorities to support the yen. Now, obviously, the yen is up against the US dollar. What we've seen is the weakening of the yen against the US dollar because of expectations that the Federal Reserve will keep interest rates high for longer, whilst the Bank of Japan was adopting a more dovish stance. Now, that's meant that we've seen a suspected intervention within the currency pair, which pulled the pair from 160 down to around 152. Now, since then, we've seen the price has steadily recovered and it reached a high of 156.80 overnight. Now, what we're looking at here is the reaction to today's US inflation report. So the weaker, cooler than expected inflation, along with weak retail sales, has fueled expectations that actually the Fed may cut rates this year, potentially in September. And that sort of caused a sell-off in Treasury yields. US dollar fell lower. But we've seen, look at the chart, that long lower wick on the candle suggests that there wasn't much demand at those lower levels. And we have seen the price actually claw back some of those losses already. So as far as levels to be watching, the low today was 154.75. So that's sort of going to be a key level on the way down. We know there's that psychological level around that 155 level. Now, if we do see stronger than expected Japanese Q1 GDP data, then we could see some yen strengthening, and that would bring that level into focus. Below that, there's a minor support in there around the 153.60 level, ahead of 152. On the upside, if we've got weaker than expected Japanese GDP data, that's going to obviously raise concerns about the Bank of Japan being able to hike rates anytime soon, and could see a strengthening then of the US dollar, Japanese yen. Testing on the upside, level to watch is going to be 156.80. That was last night's high and this week's high, also the May high. Above there, we've got the 158 level coming into focus. So also we've talked about, got some data from Australia out overnight. Now we'll be looking at the unemployment rate, which is expected to tick higher to 3.9%, up from 3.8%. However, we're expecting to see a rise in the employment rate number around up 23,000 after falling 6,000 in the previous reading. So this is going to be painting a mixed picture, but let's not forget it comes after data earlier in the week which showed that Australian wage growth was weaker than expected, rising at 0.8%, missing the 0.9% forecast. Now, this sort of, if it's combined with an increase in the unemployment rate, it's just going to make the market think twice about whether the RBA will actually be hiking interest rates as its next move, which does still stand as a possibility. Now, again, we're looking here at the Aussie US dollar, and we've seen that spike higher. That again was on the back of the the US inflation report. Now, as far as levels to be watching for the Aussie dollar, I think we can see here, I mean, we're just testing this level at the moment, but it's pretty big, around the 66.40.50 region. Okay, this is a level that we've seen has sort of really capped gains on several occasions over the last 6 months. If we do get a strong rise and a meaningful rise above there, then that's going to bring today's high in, which was in at 66.80. But again, we can see that long upper wick, which suggests that demand was for buying demand up at those levels was actually quite weak. So we need to take out that level in order to bring into focus the 67.30 high. On the downside, if we're seeing weaker data from Australia, then obviously it's going to raise questions about when, you know, the RBA might actually even start to consider to cut interest rates. Now, as far as support is concerned on the downside, look for 0.66 as the whole number. 66 is the whole number. And also the trend line support. And then below that, we've got the 100 SMA at 65.70. Just moving on, we also do have that big data drop from the US, and we've also got that earning report from Walmart. So I think that'll be interesting, particularly given the weaker than expected US retail sales, which suggests that perhaps the consumer is coming under more strain now as interest rates have remained high for such an extended period of time. So as far as the data is concerned, I mean, it's not going to be as market moving as the inflation figures we had today, but I would be watching out particularly for jobless claims, because last week jobless claims came in particularly higher than expected, adding to that weaker non-farm payroll report, and just sort of really added to the view that perhaps, you know, the labour market is weakening. So if we get another weaker jobless claims report, then that would be quite significant. I think that would, you know, really add to the picture that maybe there is some cooling going on in the labour market. Expectations are actually for jobless claims to improve to 220,000. That will be down from the 231,000 in the previous session. So here we're just having a look at the Nasdaq. Okay, now at the time I'm recording this, the Nasdaq is just approaching that record high again of 18,466. That's the level it needs to breach. You know, we've got, as I said, that weaker or cooler inflation data. It was just modestly cooler, but it just seems to set the tone that the Fed is still on track to be cutting rates. The market's now pricing in 2 full rate cuts before the end of the year. And yeah, so I mean, if we get sort of slightly more weakness in the data tomorrow, that could fuel the rate cut bets further and bring the 18,500 will be the next target, above that 19,000. On the downside, immediate support I think can be seen around the 18,000 level, and then below that, just below that, we've got 17,960. You've got the 50 SMA, and then below that you have the 17,800 level. If we get a break below 17,800, then I think that's going to negate the near-term uptrend, and we could be looking towards lower levels. So thanks very much. If you've liked what you've been watching, then please do give this video a like, and if you would like to receive more videos like this, then please do subscribe.